Hi guys, today we're going to discuss a news strategy. We're going to use Friday NFP as an example. So, the first thing that you need to do for this strategy is you need to come on the market 10 minutes before the event, the news event. So, when news is coming out, always. So, the first thing that you need to do is you need to be on the market 10 minutes early. This is important because you need to relax and you need to be calm for when news comes out. We're going to be using the 5 minute time frame. So if you're someone who panics, this is not for you. But if you're someone who likes a prepared trade, this is for you. So you need to be on the markets 10 minutes early. You prepare yourself, you strategize, you relax, you become one with the market. All right. Then the next thing that you need to do, let's say 5 minutes early, is a good time, or even 10 minutes early. If you're a calm person, even right when you get on the market, you need to go on the 5 minute time frame. Go on the 5 minute time frame, right? So now this is our 5 minute time frame. So now on the 5 minute time frame, you are waiting for the news to come out. You're not placing any trade before the news come out. This is a, you're not risking too much. This is a more friendly trade. It does have some risk, but it's a more friendly trade than placing your trades before the market comes. I mean, before the news comes out. This is more friendly. So you are waiting for the news to come out. And then, if you're a quick person, right, you would highlight the high and the low of the 5 minute candle. All right, so first, you're waiting for news to come out, right? And wait for the 5 minute candle to close. Do not place any trade before the 5 minute candle closes. Do not panic if the market keep on rising. Please wait for it to close. So whilst you're waiting, someone might take the opportunity and highlight their high and their low. I mean, yeah, but the low first. Let's say since we're using Friday as an example, right? Price pushed up. So as the 5 minute candle is printing, I can highlight the low. The moment the 5 minute closes, I can highlight the high. So we are going to highlight our low and our high, right? So this was the low and this was the high, all right? So let's write that down. That's the next thing, right? So once you have highlighted the low and the high, what you need to do next is you are looking to see where is my nearest range or my nearest range in this 5 minute candle. We're not looking for a range that's below or above. We're looking for a range that's in this 5 minute candle but in the past. So the nearest area that we can look at is this area right here. So this was our range. Its price was ranging right here before the news came out, and then when it came out, price pushed up. That means it broke out of this range. All right. So if you're someone who's fast and you're understanding what you're doing, you would have already noticed your nearest or yeah your closest range in the 5 minute candle whilst it's printing, because right now price shot up, right? It went above. You already know that it broke out around this area. So price needs to come back and retest that area before it pushes higher. Price could have kept on going higher, right? But at some point it comes back, even if it's the next 30-minute candle, price comes back to retest what it broke before it can continue going higher. So don't lose hope even if market keeps on going higher without coming back to retest that area. So this area is very important because price always retests. So we're going to write highlight your nearest range that price broke out of in the 5-minute candle. All right. Once you have done that, right, other people prefer setting their buy limits around this area. So if you're setting your buy limits, make sure that you are taking spread in account. All right. So instead of placing your buy limit right here, maybe you want to place your buy limit maybe 5 pips above the range, some do 10 pips. But if you're trading something like gold, right, it normally retests twice 8 times. So if you miss the first retest, you can always watch out for price to come back in that area before it pushes higher. So you want to set your buy limits just a few pips above or below that range, anticipating that price will come back to retest before it continues to go higher or to go lower, right? So when this next 5-minute candle opens, right, for people who want a definite or more confirmations, right, you want to see this 5-minute candle open and break above the high of our previous 5-minute candle, the 5-minute candle that we were watching. You want the new candle to break above the high, right? It does not need to close above, it just needs to dip out of the range of the previous 5-minute candle, testing the area above it. Once price test is the area above it, right, even if it goes down, it has higher chances of coming back to that area to test it again, and then it even has higher chances to keep on going up. So you want it to dip above and then come back into the 5-minute range, right, to retest. So it's okay if price doesn't dip above and then just comes back to retest to keep on going up, to keep on going higher. All right. So that's the next thing. That's the next thing that you also need to look out. This is not it's very important for people who want more confirmation, but it's also something that we can overlook. So we want the new 5-minute candle to break above, dip the area. It doesn't have to close above. It just needs to dip. Even if it doesn't, if it comes back to retest our range, that's also good, right? You have your buy limits there, your trade will be hit. If you're someone who prefers to open manually, you can also do that. So the next thing that we will need to write down is set your buy limits or sell limits a few pips. Let's say considering range, we're considering spread, right? Above or below your nearest range. All right. If your trade has been opened or it hasn't been opened yet, or you opened it manually, that's okay. The next thing that you are doing now is you're setting your take profit and your stop loss. So for stop loss, you always set your stop loss right below the low of the 5-minute candle. Also, don't forget to take note of spread. So you always add a few pips just because of spread. All right. So you set your stop loss a few pips below the low of the 5-minute candle. So below the low or the high of our 5-minute candle. Right? That's the next thing that you do. All right. So once you have done that, you now want to see where your TP is going to be. So your TP, you want to go on the 1 hour time frame. We're now using the higher time frame to see where can we put our take profit. So looking at the 1 hour time frame right now, it doesn't have much action that's showing us. You go on the 4 hour time frame. On the 4 hour time frame, when is my next possible target? When is my next range, my next resistance, right? Since we are now on the 4 hour time frame and we have a resistance right here, then we know price is not going to go far that much, right? There's a resistance that's right there. Maybe you can collect a few pips for a scalp trade, or maybe this news is the news that price needed for it to push out and keep pushing higher, and your next resistance would be somewhere around this area. That's where your next resistance is. Yes, these are all clean traffic candles, but the moment price rejected here, it closed right there, and this candle was an inside buy. It didn't go anywhere, and this opened. If price even gapped up, it opened right there. It gapped up, right, opened the candle and then dropped. So this becomes an area of interest. Price shouldn't have done all of that if that area was not important. So that would be your next resistance. So let's say price pushed higher out of this area, right? Then the next target, we know that is around this area because we have clean traffic to our left, right? For other pairs or for other situations, you might even have clean traffic from here and there won't be any resistance and you just have clean traffic. Now that's a better trade for you to. So some people wouldn't have taken this trade, this example that we just did, because when you come on the market 10 minutes early, right, you would have highlighted your higher time frame highs and lows, so you know that, am I willing to take a buy trade around this time? If around this time, around the area, when the 5 minute candle closes, because there is a resistance that's just right there. So you ask yourself that question: if there's a resistance right that's just right there, then I don't necessarily have to take this trade. I can wait for the sell opportunity because price is at a strong resistance. But let's say there wasn't that strong resistance, then it would be a great opportunity to take, as long as price does not break the low of our 5 minute candle. Then your trade is very much valid. Always ask yourself, what's invalidating myself and what's validating your trade. What's invalidating your trade and what's validating your trade. And always write those notes down. It will help you when you're unsure and when you start panicking because of the unknown. But that is all for this strategy. You just have to take note of the 5 minute time frame. Take note of the high and the low. If price pushes higher, price cannot break the low. If price pushes lower, price cannot break the high. The moment price breaks the high or the low, your trade is invalidated. Get out. All right. Now the other thing that you need to notice, especially when price doesn't break above on the 5 minute time frame, right? This is just a trick. Keep in mind, especially if price doesn't break above, right, know that price might come all the way to the low to take out people's stop losses before it goes higher. So let's say you've marked your high and your low, and let's say your trade was opened right there. Let's say you've highlighted your high and your low, right? You set your limits right here, and price comes and hits your limit, and then you see price going down. So in that case, this is how you manage the trade. As long as price does not close below and comes back to close inside, especially above that range that we were looking at, right? It's still saying that your trade can still work out. There are chances that price could push lower, so you're just watching for price not to break or not to close below the low. As long as it doesn't, there are high chances that your trade would continue in the direction that you would be anticipating. So always remember that when you're trying to manage your trade, always manage your trade well. This is what we do to manage our trades well. Now, those are the most important things for this new strategy. So I hope you all have a good day, a good night, wherever you are. If you have any questions, please feel free to message me.